Hello, everyone. Thank you very much for stopping by. The purpose of today's video is I got a letter from my service of my loan, and I paid off the second of 3 mortgages, so I only have one left. Moved those into a HELOC versus an installment loan, but still paying off the debt. So just wanted to do a brief recap of where I'm at in terms of velocity banking. Hopefully that's better. I know a little shadow in the light. Okay, so when I first started my journey in terms of velocity banking, I was looking for a way to reduce my overall debt. So I just got on the internet, read some books, read some articles to try to pay off the mortgage faster. From there, I also went to YouTube, looking at YouTube to see, okay, how can I pay this mortgage off in a couple of years or a couple of months? That was the 3 mortgages. Came across different websites. Then I came across the concepts of velocity banking and accelerated banking. And that generally means doing banking in a different way. From there, this was the traditional banking that I was doing, working at my W-2 job, getting putting money into the bank. So this is my W-2 bank. So working my W-2 job, putting the money into the bank, paying all of my bills. I was negative 2,500 when I first started velocity banking, and whatever I had left, let's say maybe $300 more, I was just holding on to that as cash. That was the traditional way. Then I moved into velocity banking, working my W-2 job, putting the money directly into the bank, and from there, moving some of that early into a line of credit. To the line of credit, or the primary line of credit that I started off with was a credit card. That credit card being Wells Fargo. I was over the limit about $79 at 29.9%. So what I started doing in doing velocity banking was just taking some of my bills, a water bill, electric bill, putting that money early onto a credit card, and then paying the bill through the credit card and depositing as much of my employment check into the credit card. And that helped me to pay off Wells Fargo quickly in a couple of months, because I was dumping some bill money initially. I think that was in January 2024. By March, I saw how good the system was working. Then I started putting more and more in. Then, and something I guess I left off, I went to Navy Federal. Now with Navy Federal, I started using convenience checks and cash advance. So I was pulling about $1,860 a month off of my Navy Federal green card. From that green card, I was then placing it onto one of the bills and letting it sit there for a while, and then pulling it back off and then paying back. Now I was paying 18% interest with Navy Federal in doing that, but that helped me to quickly pay this off. Now eventually I got to the Navy Federal prepaid card now, where I liquidate $1,860 a month from the Navy prepaid card, from the Navy green card, and put it onto the Navy Federal card, and they consider that as a purchase. So now I'm paying 0% interest. Okay. So again, when I started the journey, I had 10 personal credit cards at about 20 to 25. This was in 2024. And I had 3 business cards at about $19,000. The credit score that I started in 2024, I was probably at 690 to 710. Now I'm at 739 to 789. I had about a little north of $351,000 in debt. 160,000 of that was student loan. Okay, so 160,000 of this, I think, was student loan. It could have been lower, so that got wiped out. Now, in continuing to do velocity banking, I was able to pay off, even before this was wiped out, I was able to pay off one mortgage in April of 2024. I just paid off the second mortgage in April of 2024, probably 2 days from the last one. So 1 year using a home equity line of credit, improving my credit report. So now I have one mortgage left at about $75,000. So this would be mortgage 3. So I've been doing jump back over here. So I've been doing velocity banking for the last year, for the last 17 months, and these are just some of the results. I've been able to definitely pay off two mortgages, wiped out all of the personal debt. So all of the personal credit cards are gone, and I'm left with $19,000 on the business side of my credit cards. So on my personal side right now, with the 10 credit cards that I have, the balances are 0. On the business side, I have about 19,000. Currently, if I need to charge something, I'm using a business card and paying it off and keeping it off of the credit. So that's one of the good things of I guess of having a business. You can kind of like do it, or maybe that's the way that I've been doing. I'm not saying do it that way, but I'm charging on that side and keeping the personal side clear as best as possible. One of the other things I'm doing with velocity banking is try to make sure that I'm only using maybe one of these credit cards for my living expenses in general, because it's been easier to do with a budget. I can see the cash back that I'm using. So this was just a recap of where I'm at. Yesterday I received a letter that my second mortgage has been satisfied. So within a 17-month period, I've been able to pay off 2 mortgages, but that debt has been shifted over to HELOCs. And now I'm dumping all of my income, all of my investment income, anything that I get from consulting, into the home equity line of credit that I have, and then I'm paying down the debt. The current interest rate for this line of credit is 9.25. I started off at 10.25, so it has come down. And why has it come down? For various reasons that include government decisions, private sector decisions, and nonprofit decisions. So as a political economist, this has been one of the things that I've been trying to do, chronicleize my journey in terms of how I understand velocity banking and how velocity banking, accelerated banking, has worked for me. So again, I'm not a CPA, I'm not a financial planner, I'm not an advisor, I'm a political economist using velocity banking, accelerated banking principles to pay down debt, but also use debt to leverage. So starting in 2005, it's a lot of things. I guess I'm talking about a lot of things. In 2005, I got my first property. 2008, second property. And later in that year, still 2008, I got a third property. And I think 2012, I got a fourth property, but I lost that fourth property in bankruptcy. I kind of got the big head and I was moving a little faster. But if I would have known more early about Velocity banking, I think I would have did things definitely different. So again, I only have one mortgage left. That remaining mortgage is at 75,000. The interest rate is 3.75%. It was at 5.75%, but Wells Fargo did a loan modification, and I'm still paying in as if it was at 5.75. All right, well, thank you very much, and I really appreciate all of the kind words, the blessings that I've received in trying to do this. Thank you very much for all of the information and all of the viewers who are already doing velocity banking and some of the suggestions and recommendations that they have made to me. Again, thank you very much. I'm just happy to have that second mortgage kind of sort of paid off, although it's under the HELOC. In general, I'm gonna talk a little bit more. So one more mortgage to go. See if I can get that into a HELOC and pay it down quickly. All right. Thank you very much. Have a great day, everybody. Bye-bye.